Today, we're going to talk about ICT trading versus SMC, smart money concept. And we're going to tap into also ICT trading versus price action and also ICT trading strategy versus SMC. Why? Because it is the rage and it's all over the internet and people want the inside scoop. So I'm going to spill the tea today and hopefully rest some of the accusations and some of the drama that's associated with ICT's wonderful smart money concept. But first, before I begin, welcome. If this is your first time here, you're going to want to tap that like button as well as subscribe to our channel, because we're going to give you weekly videos on how to use ICT's investing and trading strategies in order to live the FIRE lifestyle, which stands for financial independence, retire early. And that is what I'm talking about. That's my dream and that's my goal. And to be quite frank, I would have never been able to be in a position of even discussing this matter because I'm celebrating my 59th birthday today. And I, ladies and gentlemen, do not have a retirement plan. But with ICT strategy, that's my goal and dream over the next 5 years, to dedicate myself to the strategy because it has truly worked for me. I tried the retail trader strategy, and let me just say, over the last 20 years, it has not worked for me. And instantaneously, within 30 days of using ICT smart money concept, I was able to become a profitable trader. Now, I will admit, after trying something and working on it for 15 something odd years, off and on, taking it really seriously the last 5 years, I had a little bit of background in this whole thing. But once I understood ICT's psychology and also his, concept as far as the smart money concept is concerned, I knew it was a go for me because it fit my psychology. It also fit what I believed the markets were actually doing all along. I didn't believe it was about fundamental analysis, etc. But let me not get ahead of myself. Welcome to the Market Goddess, where we will help you. Our dream and our goal is to help you find miracles in the market each and every single day. With ICT strategy, it is very doable. But who is ICT? Let's break it on down to you. ICT, the inner circle trader, aka Michael J. Huddleston. He is an expert Forex, futures, and also commodities trader, an educator of 33 years. I wrote this ebook about a year ago. He started trading at the age of 20. He is bipolar. That's his confession. That's what he stated to everybody. I'm not giving anything that is not new underneath the sun as far as he is concerned. And he is a Leo, not a Scorpio. I got it all wrong. He was born in August. He resides in the Baltimore, Maryland area with his wife. And I perceive that he has 4 boys and a girl, I think 5 children altogether. And in addition to that, some wonderful dogs that he absolutely adores. And just recently, he and his wife celebrated 24 years of happy matrimony. So he has definitely some skin on the game when it comes to, handling women in this lifetime. He started trading with money he made delivering pizza for Domino's and other odd jobs. He is the creator and founder of the ICT smart money concept. Let's be clear. He's been doing this for 33 years. And over the years, unfortunately, people have taken his concept, decided to create their own terms and names. And I'll be honest with you, the first person that I learned from ICT, she was calling some of his strategies something else. And then later on, she confessed because people came into her wonderful, great teacher and the like, just absolutely phenomenal, but came into her, was a part of her group and basically stated that you can get all this information from ICT, from the horse's mouth, for lack of a better term, for free on YouTube. And I'm here to tell you that all the information I'm sharing with you is exactly right and it's very true. And that's when I went to do my due diligence on ICT, because I was taught that it was called the smart money concept. Another term was institutional trading, etc. And then I went and found ICT, and the rest is history. But I will admit, I learned from several individuals that taught beginners ICT strategies because it was short it was succinct, it was to the point, and it was a lot easier. Even the young lady that taught me how to do ICT strategy, she did it in a way where we used just 4 of his PD arrays, and we were able to make some really good money, make a living trading a NAS 100 in particular, okay? So, but let me continue on with sharing with you about ICT, but that's why there is this battle going on out there, because, ICT felt the need to really defend himself, and more importantly, because some people criticize that his strategy, number one, doesn't work, and number one, his theory is not true and inaccurate. So he's been on a major mission, and I'm supporting him 110% because I've seen it with my own eyes. I have traded it with my own back testing and my own live trading, and I've done small accounts. I've also done prop firms, and believe it or not, my son, who has learning challenges, he was able, in a nutshell, on his first attempt, he was able to pass a 100K prop firm challenge, okay, on his first attempt at the age of 18 years of age. Never heard of before. And I was able to pass on my 5th attempt a prop firm in regards to using ICT strategies in the Forex arena, and we are also doing it now in the futures arena also. So that's why I know this stuff works, because if you can take a kid with learning challenges, etc., and he's able to go in there and make some serious dough in the market, who has had $10,000 days, okay, then you know that this can really work. And more importantly, believe it or not, I taught him, ICT strategies, and he learned better than me. But unfortunately, he couldn't learn, just watching ICT. It just went over his head. It was just too much for him. And so I broke it down into nice bite-sized little pieces so that he could comprehend it, understand it. So now that he is a successful, making a living, profitable trader. Okay. So I'll break that down to you at another, another video. But in a nutshell, let's continue on. ICT's algorithmic theory is that the markets are run by an algorithm. I don't know why this is a surprise. I don't know why people poo-poo this theory. Look, everything is run by an algorithm. And if you study anything about high-frequency trading, which is a computerized program that is run based on an algorithm, which banks were getting just totally bombarded by these wonderful hackers out there who were just really taking over the markets. Well, like they say in the old days, if you can't beat them, join them. And that's what the banks started to do. We're talking about $1 trillion, as far as Forex is concerned, industry, $6 or $7 trillion industry. We're talking about a multi-billion-dollar industry as far as Wall Street is concerned. And if you think they're not using the algorithm, well, God bless your heart. In a nutshell. Listen, I learned a long time ago, ladies and gentlemen, that trading is nothing but legalized gambling. So we got to face that reality. And guess what? In legalized gambling in Las Vegas, what happens? The house always wins, until MIT students went in there, figured it out, and guess what they did? They kicked them out. And you best believe that, in a nutshell, these banks are in the business of creating this algorithm so that they win and not you. You lose, okay? And you are what ICT calls the dumb money. That's why they call it smart money concept. Okay, let's continue on. So HIPTA was created by the big banks and hedge funds to psychologically manipulate retail traders out of their money. That's the conspiracy theory, okay? He has dedicated his life to really decoding the HIPTA, interbank price delivery algorithm. And on his YouTube channel, he teaches it for free, ladies and gentlemen. So you can go to @InnerCircleTrader on YouTube, and you can start studying his program right now. And I suggest, like he would suggest, that you start with, I think it is Mentorship 2016, and that'll get you going to learn ICT strategy. So he has decoded the HIPTA, and it is based on a theory that I'm going to go into in a couple of minutes. But ICT has proven on several trades that trading is not random and has been able to predict price to the T on live trade that I've even seen myself. Just mind-blowing to see what he's been able to do. And that's why I've been committed and dedicated. All right, let's go to the next one. What is ICT algorithmic theory? Real simple. ICT's algorithmic theory refers to a set of principles and methodologies developed by Michael J. Huddleston for trading in the financial markets. The main points is that the bank trading algorithm, interbank price delivery algorithm, is programmed to do only two things. Now just keep this in mind, just two things. Number one, rebalance the inefficiencies of price action, that's fair value gaps. And number two, find the liquidity in the market, that's retail traders' stop losses and pending orders, and grab it or sweep it for their gain. The ICT term used often by traders is liquidity grabs or liquidity sweeps. Now, HIPTA does this interchangeably, does it 24 hours a day, 7 days a week, starting at 12 o'clock a.m. when it resets to start the brand new day. So this is the difference between ICT traders versus retail traders. So ICT traders' philosophy is price action and time is run by the algorithm to go after liquidity at buy stops and sell stop areas and balance the inefficiency it creates along the way. Whereas price action is determined by the buying and selling pressure between the bulls and the bears. If the bulls are winning if it's going up, and the bears are winning if it is going down. Now, ICT believes the market is not random. It can be very predictable based upon the goal of the algorithm. Retail traders believe that the market is random. ICT can predict price action sometimes, not all the time. There are little nuances in the market, and sometimes that computer algorithm is run manually because they're always going to keep us on our toes. Like I said, their philosophy is to come after our money. And if we're smart, we'll just, if you can't beat them, we'll just join them and we'll follow their coattails and get some wonderful profits along the way. Now, as far as retail traders are concerned, they use random support and resistance lines. They also use indicators. They also use candlestick shapes like M's and W's, head and shoulders, half Batman. I remember I used to study the cup, the reverse cup. I studied it all. You name it. What was the other one? Oh, I just forget them all. It was just a lot, okay? And I always got, even when saying, but it formed a head and shoulders. It formed a W. Why is it not panning out? Price action is not determined by buying and selling pressure between the bulls and the bears, is what ICT traders believe. Candlestick patterns like shooting stars and bull flags to guesstimate where price is going is usually the deal, okay? Other things we've been taught about, pinball reversals. We've been taught about, bull flag, bear flags, you name it. All those type of things. What blew my mind is when I was learning how to do ICT strategy, that my teacher was saying she doesn't even study candlesticks, hasn't memorized them, and doesn't use them. I was shocked. I had to learn what she was talking about because I knew no other. He uses PD arrays to chart to trade successfully online. They factor in fundamental technical and sentimental analysis in their trading. ICT does not factor in sentimental analysis in their trading. Now, he does factor in, fundamental analysis to the point of interest rates as far as bonds and things of that nature. But on a general basis, he does not give a whole lot of credence to fundamental analysis. Matter of fact, he states that they use fundamental analysis in order to manipulate us to do their bidding and have their gains, period. Just long as it, the story factors in to their success or even sometimes their failures, okay? ICT, in addition to that, factors in technical analysis. Only fundamental is bank bond rates in trading, but at very small rate. The rest, he believes, is just noise and manufactured to justify the bank's moves. Heavy on psychological analysis. You as a trader have to understand that 85% of trading is mental, ladies and gentlemen. So ICT spends a lot of time. I'm sure you guys seen him, his rants, they call them. He even calls them rants on Twitter, etc., where he really tries to get into our head to really understand the importance of getting our psychology together. You master the mind, you master the market. It's really that simple. Now, retail traders, they factor in, like I said, fundamental analysis, technical analysis in their trading, as well as sentimental analysis. Psychological analysis is important, but not practiced as primary. Well, I'm going to tell you, I spend literally that 85% on this because I'm very clear. If you master your mind, you master your market, you master your market, you master your life, you master your life, you master your destiny, ladies and gentlemen. It's all intertwined. So listen, I hope you enjoyed this piece of information. Look forward to the next video where I'm going to really explain to you why I chose to use ICT strategies after 20 years of trying to use retail trader strategy and having massive success. Do me a favor, if you like, comment, subscribe, and tell me which one you prefer to use. Is it ICT trade? Are you an ICT trader or are you a retail trader? And give me your pros and cons and your philosophy as far as this theory is concerned. Leave your comments in the bottom. I really appreciate it. I'll see you at the top, over the top, Monpolicha, ching, ching. I will see you at the bank. Bye-bye for now, and thanks so much for coming to The Market Goddess.